All right. So today we're going to go over an easy yet very effective way that I use to this day, um, a trade setup. So I'm just going to go to a few examples on a few products and set you loose. So there's two things we need for this. We need a good supply or demand zone. You could look at the videos in the description. I go over my view of what makes a good supply and demand zone, but you need that. And you need high volume, and that's it. So let's go over these examples. On the left is the hourly. I have this demand marked here because the market comes up, pauses, and shoots up out of there. And according to like this swing, that's about a halfway retracement. Looks like a good demand zone to me. Untested, everything checks out. So when we look on the right here on the 5-minute, well, that's their area of interest. When we come down into it, we have abnormal volume. What is abnormal volume? I don't know. Does it stand out? That's how I look at it. Does the volume stand out? And what does that tell us? Well, I believe there's a long imbalance created in this area. And now there's a ton of contracts being executed here. I'm going to assume that they're long contracts because there's a long imbalance here. And that is my signal of a potential bottom. So I'm going to get long as that candle's forming. Once the volume starts reaching up here and maybe we reach, this point in the candle, I'll start buying. Using that candle as our stop once it closes. So good demand level, abnormal volume. And then we get a reaction. That low holds for the rest of the day. Let's go to NQ. Look at this example. On the left is the hourly again. We're looking at this supply or demand down here, which is the originating demand of the sub move, potentially the strongest level. How you draw it, so it's up to you. Once again, in the description will be videos over how I do it, but I'm just going to draw something like this, and that's our originating zone. So when we come into it on the 5-minute on the right, I'm looking for abnormal volume. Now this is a example that might have tripped you. You might have had to enter twice to get the full trade. So we come into this zone, and right here we do have the highest volume of the day. This candle I would have bought on, and I would have used that as the low. And we do end up getting a little push off before we end up making a new low into our demand. When we make that new low into the demand, well, this is definitely abnormal volume, right, compared to recent bars. So I'm going to buy again on this candle. And that's the one that ends up being our low. Crude, same thing on the left. Good demand. It's cheap according to our trend. I'm going to draw something like that. And kind of the same picture. We do get extremely abnormal volume on this candle, which would have offered a great trade out of it. But it didn't quite reach our zone. And when we do reach our zone, we see abnormal volume again, which would have been on this candle. And we could have used that as our buy again. And that one ends up being the low. So sometimes it takes 2 attempts, but both times, you can see fantastic trades that came out of them. They should have been at break even at worst, right? Last example is gold. This is just a more intraday example. So we're just looking at the 5-minute and we come down, and this 5-minute, we create a demand imbalance. We take out supply. Okay. But at this point down here on this candle, buyers exceed sellers. So now I'm looking for a buy. So let's see if we get a signal to buy. Go forward, come down into the originating demand with abnormal volume. Boom. That's what we're looking for. 2 things. Now, do you have to buy on that down candle? No. Maybe that down candle That's just your signal. Now, after this down candle gets put in, after the reversal candle gets put in here, now you're allowed to take longs. Maybe that's how you put it into your system. I prefer to get the best price, so I want to buy aggressively when this candle is falling. Don't catch a falling knife, they say. I disagree. But you can use that as a signal. So after this candle is when you would go long. So maybe you go long on EMA crosses or something. You know, that would happen somewhere over here. And it still would have offered a good trade and would have kept you on the right side of the market. So simple, effective. Let me know if you have any questions.